Hi, this is Sylvia from www.ifrsbox.com, and you just started to watch the video with a very basic example on how to make journal entries and how to prepare the statement of financial position in line with IAS 1. That's useful for those of you who prepare for some exams or just need to understand how journal entries and financial statements work. This is a very simple and basic example, and if you really need explanation of some more demanding issues, visit my webpage ifrsbox.com, subscribe and get tons of free IFRS articles, videos, Excel files and other stuff. So let's go to this example. ABC is a limited liability company that has begun preparing the final accounts for the year 2004, and there is still a lot of work to do. The list of account balances is as follows. And here we have several account balances that we will need in this example. But note that these are all in plus sign, and that's the tricky thing, because we will have to sort out which of them are on the asset side and which of them are on liability or equity side. Also, the last line has a label profit or loss accounts net, where result equals the profit. So here all profit or loss accounts are grouped, which is okay for this example. Let's go on reading. Moreover, ABC has to make the following entries. The first one, sale of goods for 2000 to one customer was not recorded in the trial balance. Related dispatch of goods was included. The second one, ABC forgot to record two last bank account movements, bank charges of 100 and a payment of a supplier's invoice of 3000. The third one, the result of inventory counting, loss of 150, was not recorded in the trial balance. And the fourth one, monthly depreciation charge of 5,000 is missing. Prepare journal entries related to transactions 1 to 4, and based on the final account balances, prepare the statement of financial position in line with IAS 1. So first, we are going to prepare our journal entries, and we are going to write them down to this pre-made table. The first one, the sale of goods, was not recorded, so we debit trade receivables and credit profit or loss, some sales account, with 2000. The second case, in fact, there are two unrecorded movements on bank account, so we will prepare two entries. Entry 2.1, omitted bank charges. Well, we debit profit or loss, some financial expenses account, and credit bank accounts with 100. Because our bank accounts decrease. Entry number 2.2, unrecorded payment of supplier's invoice. Well, our trade payables decrease, so we debit trade payables, and also our bank account balance decreased, so we credit bank accounts with 3000. Transaction number 3, shortage on inventories. Well, the debit side is somewhere in profit or loss, and the specific account depends on the nature of the shortage mainly. But now that's not that important. We simply debit profit or loss, probably cost of sales, and credit inventories as they decrease with 150. And the last transaction, number 4, monthly depreciation charge. We debit profit or loss depreciation account, well, that's in most cases, and credit accumulated depreciation account with 5000. Sometimes there is something like depreciation provision or similar account, right? Fine, we are done with our additional accounting entries, and unless you're sitting some exam, you don't need to do it like here, but it's good for understanding what's going on. Now, before we prepare the statement of financial position, I recommend preparation of final trial balance, so after recording all the journal entries, because thus you can verify the completeness and correctness, right? So, based on the new account balances, we will make statement of financial position. And it's quite simple. We just make a table, and in the first column, we list all accounts and their balances in the second column. Now, this is quite tricky, as I mentioned already, because all the balances above are stated with plus sign, and in fact, some of them are assets and some of them are liabilities or equity. So here, what we're going to do, we're going to state all assets with plus and all liability and equity accounts with minus. And we would do this for all profit or loss accounts too, but then all the expense accounts would be with plus and income accounts with minus. And what about our profit or loss figure? Well, it says in the brackets that it is a profit. So total revenues are higher than the total expenses. So we definitely state the net of all profit or loss accounts with minus, yeah, because it is profit. If this would have been a loss, we would state it with plus. Now let's check this. If all account balances are stated correctly, then the total should equal to 0, and that's because basic accounting equation applies. So assets should equal to liabilities and equity, and therefore, if we have all assets with pluses and liabilities and equity with minuses, checksum shall equal to 0, right? And it's fine in this case. Now we're going to bring all our journal entries here to account balances. Each journal entry will be shown in the separate column, and all our debits will be with pluses and credits with minuses. So the checksum below all entries will be 0. Let me show you. The first entry. We debit trade receivables with 2,000, so enter plus 2,000 to the line corresponding with trade receivables. Yeah, it's like here. Then we credit profit or loss, some sales account with 2,000. So we enter minus 2,000 to the line belonging to profit or loss accounts net. Well, it's because here in this example, we have no separate accounts for profit or loss items, and that's for simplicity only. And you see that your checksum in the last line is 0. So we made this entry correctly. The entry number 2.1, we debit profit or loss with 100. And credit bank accounts with 100. And that's minus again, of course. And checksum is 0. Entry number 2.2. Debit trade payables, 3,000. And credit bank accounts, minus 3,000. And checksum, 0. Entry number 3. Debit profit or loss, 150. And credit inventories, 150. Checksum is 0. Entry number 4. Debit profit or loss, 5,000. Credit accumulated depreciation account, 5,000. Checksum, 0. After we are done with all the entries, we can prepare account balances after recording the missing transactions. Well, we simply add one last column where we make a sum of all the account balances before making any entries and all entries themselves. Yeah, let me just copy it to the other rows. As you can see, now we have our final trial balance, which is the basis for the statement of financial position. Well, checksum below is 0, so it's fine. Here, we have some pre-made format of the statement of financial position, which is in line with IAS 1. IAS 1 sets minimum requirements for the statement of financial position and its individual captions, well, but in this example, only the items with non-zero balances are listed, right? So as you can see, there are assets in non-current and current distinctions, starting with non-current ones. And below there are equity and liabilities, starting with equity, then non-current liabilities should follow, but there are none in this example, and current liabilities are stated in the end. So we will go back to our final account balances and make sure that we included each balance somewhere in the statement of financial position. Well, there are some automatic formulas to do this, but we will go one by one manually, yes, for better illustration. So the first two balances, property, plant and equipment and accumulated depreciation account, go both to non-current assets under the heading property, plant and equipment. Their net total is 160,000. And let me just make a small green tick next to the account balance to show that we have dealt with that, okay? Share capital goes to equity under the heading share capital. Green tick. Retained earnings brought forward go to equity too, under the heading retained earnings. Green tick. Trade receivables go to trade and other receivables in the current assets. Green tick. Trade payables go to trade and other payable in the current liabilities. Let me put the green tick. Inventories go to inventories in the current assets. Green tick. And bank accounts go to cash and cash equivalents in the current assets. Green tick. And finally, profit for the year, or sum of all profit or loss accounts, well, it goes to retained earnings because we must include current year's profit in the balance sheet. Otherwise, it would not balance. And the green tick. Our balance sheet or the statement of financial position is now completed. And if you're making the statement of profit or loss and other comprehensive income, the steps are very similar here. You just need to make sure that you present individual profit or loss accounts in the correct classification. So if you'd like to learn more and get some IFRS materials, just visit my webpage www.ifrsbox.com, subscribe and enjoy. Bye and thanks for watching.